The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 198. Nasdaq up 59. S&P's up 19.5. Gold contract down $6, trading at $15.07 an ounce. You get silver down 16 cents, $17.51 an ounce. Light sweet crude up 70 cents, $53.16 a barrel. Notes and bonds. You get the 10-year flat, 131.24. The 30-year up 13 ticks at 164.26. Now, those notes and bonds, folks, okay, even yesterday, they would not back off. They went higher with tremendous volume, wide price spread. The note and bond market is saying, you know what, guess what? You know, this S&P, yeah, you're going to bounce, but they're not believing that you're going to go much higher because this note and bond market is going after its highs. King dollar up 69 ticks, trading 98.934. The euro is at 109, the yen is at 107, and the pound is at 122 to 1 U.S. dollar. We got a Friday.
We sure do.
We're in October.
I know.
And I want to go over to GE first. So check this out. You know, my take is that GE is going a lot lower. Technically, the way that's set up, okay? And when I say technically, it looks to me like I think it's 562 that wants to get tested. So let me just bring this up on a bigger basis. Yeah, so you last low anytime. Yeah, you see it. You're still inside that 591. So 550 to me wants to get tested.
Okay.
You're 860, but listen, this is gonna, you know. Of course, you get bulls and bears analysts. There's no doubt about that.
That's true.
This one this morning is pretty intense, though. You got our J.P. Morgan's coming out, and they're saying that their aviation business, right, is has an equity value of $30 billion. When there's other folks out there saying it's worth $100 billion.
I know, $30 billion, not bad, unless you're writing checks off a value of $100 billion.
Exactly.
Right?
And that's on your balance sheet.
Yes,
you know what I mean?
Right.
You know,
oh, definitely.
So
it's equity on their balance sheet, for sure.
It's a big number, man. And
it's an asset, right?
That's, yeah. And they don't have a good track record.
No.
They don't have, you know, so it's good. So let's see. Now, this guy is a notable bear on GE. Okay, said the difference in the two valuations value estimates would result in a $7 to $8 stock difference.
That's a problem when your stock's trading at $8.
Exactly.
Yeah,
no,
right.
exactly.
Yeah.
You know, my
it's a problem no matter what, but it's a big problem when it's trading at. So amazing, man. I hadn't heard about it. So their aviation business looks like it's at risk of a slow bleed from peak performance. Yeah. Contrary to consensus, these dynamics suggest that GE Aviation is worst positioned from a growth perspective and deserves a discount to its peers, which trade at an average of about 6.5% free cash flow yield, or 2 times EV sales.
And so look at this. This is pretty cool. There's the bulls and bears. You got. Well, you only have 4 sells. You get 10 buys, 11 holds, and 4 sells.
And you know, it's really cool. This is exactly what we just said. The aviation unit takes on most of the company's liability burden for the other businesses in the portfolio that don't have the resources. As in, that's an asset they're using to offset liabilities in many different areas of. And what is their market cap right here? Well, yeah, there's your problem, man. The whole company's worth $74 billion. So if there's a $70 billion discrepancy,
they're broke.
Yeah.
I mean, this is going to be one of these they'll be in the Harvard, MIT, you know, playbooks. I think it's going to take 2 or 3 more years, but you know, this is kind of the slow bleed, and this is what happens when you cook your books, man. And they're so big that
they sure are. That's why I was jumping in there for a second, even jumping into the revenue. Let's see how they break it down. So there you go. Aviation accounts for $30 billion of their revenue.
Right.
Yeah.
Yeah. Biggest part of their revenue, right?
Yeah. I mean, biggest part, but 30 of only 120, so a quarter of their revenue too. Because they have, just like you said, they have so many other different categories.
Pretty wild, man.
That is a wild one.
So let's go take a look at those S&Ps. So you got a nice bounce going yesterday. You didn't have enough volume on the way down. Rejected lower price. Bottom line, we'll see where this baby is shaking out today. You got have a Friday. in the market, you know. Well,
Friday after a tough week, man. I mean, it's quite a turnaround yesterday. Pretty remarkable.
Yes.
But, man, if you just go from the highs of, like, Tuesday where we came in to trading, yeah, why not? Because this will be fun. We're right at, like, 3,000, which makes it very easy. Yeah, that's Tuesday. We're coming in. We're 29.94, all right? So for simple math, I'm like, we started Tuesday before that worst ISM number on Tuesday morning.
Yes.
And then you trade down to the low yesterday. I think it was 140. Yeah. 28.55. It was almost 140 S&P points from the low, but then it's cool that we're now up 70 points from that level.
That's a high volume low too. Can you put the Fibonacci on this?
Sure.
I'm just curious as to what we've done thus far.
I mean, that's just to put it in perspective. That's 4.5% down in the S&P over 72 hours, and 2% up within 24 hours.
Right. So we did that, you know, there's the number. We did just over a 50% bounce from the top to the bottom. And the number to keep your eye on today is going to be 29.24. That will get you back underneath the 50% number.
Okay.
Yeah.
And that 29.40 lines up for the 618.
Right, exactly. Which is a really important one to keep your eye on, folks, because that would, if it could get to the 29.40, that would show that it's a strong bounce. Thus far, you don't have that, you know. So, thus far, the Bulls and Bears are going to be fighting all day today, man.
Yes, I would imagine, man.
Yeah.
I mean,
gold. Let's go to the gold contract, because this is going to be a big day in gold, folks, okay? The reason being is that, you know, gold got trashed on a Tuesday.
Yeah.
Down hard and fast. Came into the breakout area. We got down.
We popped on Tuesday. Wait, trashed?
Yeah, well, hit the low.
Oh, okay. Okay.
Yeah. They came back.
Yeah.
The bottom line went to 1465. So the number that I'm looking for on the weekly is 1484.30. Now, way over that, but guess what? It's a Friday.
Sure.
And the reason I'm looking for that is that that's what happens there is that then you're going to get rejection of lower price also on the weekly. Okay? So that's what I'm looking for. Do you know what I mean? You can see that on the weekly was 1448. But I'm using the higher number because it's a better way of doing it, meaning more conservative, more conservative.
Yes. Well.
So, you know, as long as we're there, man, that's going to be a big number. So, intraday out here, we're catching a little bid right now. And intraday, what you do have is that spike on the jobs numbers does have some volume. Now, we got to 1522, but we didn't get up into that high of yesterday, which also has high volume. So,
oh yeah, man, it's been a big week of news.
The probability is pretty good there.
Yeah.
King Dollar. What do we got with King Dollar? This is, you know, it's sideways move out here today. But the number to keep your eye on there is that 99,370. It's no big deal. I mean, that's only, you know, the last high prior to this high.
Yes.
You know, until the dollar, folks, the DXY gets under really 98,371. You're really you are above that that range that we've been in since last October.
Yeah.
So
a
lot of moving parts, man. You know, number wise, the jobs numbers came in basically. It was the wage growth that came in light,
and it was light. It came in, I think, 136,000. Yeah, so below forecast, which was, I think, 145.
Okay.
So 136. Unemployment rate, 3.5%.
Yeah.
But I believe wage growth coming in at 2.9%. They were looking for 3.2%.
Yeah.
How do you get an economy that we're just crushing it in the unemployment, but we have no wage growth? I said, you know, it's a gig economy, man. Anybody can get a job if you want to just pull up your phone, drive for Uber.
Get a job.
Doesn't necessarily mean that you're going to get paid well.
Totally. Stay right there, folks. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 174, Nasdaq's up 53, S&Ps are up 18. And now here's another iconic stock that you talk about going back to Silicon Valley.
Right.
Hewitt Packard. These were actually people, folks. Hewitt and Packard. They were two partners.
Hewitt and Packard.
Yeah, exactly. Right. So you take a look at this equity. You're going to see from last October, $27. You're at 1682. Now you're breaking a B point with monster volume, So you got an A point out here with 2174, a B with 17. So you get that's not bad, 4 points, right? So that still gets you to 15, 18. Let's see what else is there, and then we'll see what they have to say about this. Look at that. It's been the same consolidation a long time, I guess.
Yeah.
Yeah. So, what is the news on Hewitt Packard here? Let's see.
Turbulence ahead, I would say so.
Let's see what they have. Okay, so they tumbled to the lowest level in 2 years after the company announced a broad restructuring, I see, designed to cut costs, most growth, sales growth. It will cut as much as 16% of its workforce. Ooh, that's a big number.
It is. We'll jump to their numbers
Wow.
in a moment, but they got a lot of employees.
That is pretty intense. It cost $1 billion. The personal computer maker also gave forecasts for suggested 2020 earnings, and both boasted its stock buyback program and lifted its dividend.
It's pretty remarkable when you have to spend $1 billion to cut 16% of your workforce. I mean, I know it makes sense, but they're just so mammoth,
And well, what's so crazy here? You're spending $1 billion.
Yeah.
Then you're basically buying back your stock, and you're lifting a dividend. I can't picture why they lifted a dividend. Lifted? Do you think lifted means taken away?
No, maybe raised.
Yeah, that's what.
I think that's a poor writing
right.
by whoever's writing.
That's pretty amazing.
And lifted its dividend.
Yeah,
I agree. It could be ambiguous, but I agree. Because it says both boosted, I would say they're both going to be in a positive light. So I would say raising it, but I agree. Yeah,
that's a pretty hot number, man.
Yeah.
And so if we take a look at
exactly where are they at? 55,000, so almost 10,000 employees. 16%. So you're looking at 9,000 employees.
That's a bad one to wake up.
It's a lot of
working
people.
for Hewitt Packard,
a lot of people,
man. That's pretty intense. And
you can see their revenues, though, man. They take in $58 billion. They're only going to spend $1 billion to cut 16% of their workforce. If they're able to probably stay streamlined, keep that revenue where it is, in the long run, that's going to be a lot of a lot of salaries, costs, whatever it is, right?
Right.
Yeah.
Coming to the bottom line. I mean, that's what I suspect they're trying to do, right?
Yeah, and that's the question. The market's saying, I don't know, that might be a little dicey, cutting 8,000 employees.
Oh, my God.
Because guess what? You got to grow at some point, man. You just can't cut costs to...
helps you a few quarters, right?
Yes, right.
Now, the 10-year. Yesterday, folks, was quite a day. I mean, you had a beautiful bounce in the marketplace, and, listen, markets don't go down forever, up forever. 3 days down the road, hard volume. Said, okay, I don't want to go down any further.
Yeah.
The notes and bonds, the bottom line is that they want the lows of September. So we'll see how this shakes out. I mean, we go back 3 weeks ago, we were at 1.90. Just
remarkable, man.
Yeah.
The whole move since even August 1st really is remarkable.
Yeah, it is.
We go from 2.05 on August 1st to 1.42, and then back to 1.9, and now at 1.5. Just staggering moves for the bond.
It's like it's
in just about 2 months,
Yeah, and then
we dropped more than a half, up 0.4, and then back 0.4.
Right. When you put this on a longer basis, folks, it doesn't even look like the bond market moved. I mean, it's been a one-way move here for quite some time.
Now, those bars, though, are mammoth bars that we just...
Those are weeklies, yes.
Yeah, I mean, they're mammoth, You got to go back to the election. Remarkable enough that that's when you had that type of action. Right. Now, it kind of defeats the purpose since you got it and you pulled it right back, right?
Yeah.
But, man, that month in the second week of September, let alone the pullback over that time, let's put it on a monthly.
Yeah,
right?
put it on like a 10 or 15-year monthly, because then you're going to see, then it's like, oh, you're just laying at the bottom.
Yeah, and those two bars, you had a huge collapse in August, but, man, oh, man, we got a pop and then a pullback in September, and we're right back to 1.5,
and
man.
Can you just put that? Anything that's under this breakout, which is... This is good to know.
1.71.
Yeah, 1.71, and that is the election. That's a normal. Like when when you break topside, folks, normally you go back, and you'll test the breakout. But when you're underneath it, it's a problem.
Yeah.
But testing it is great. Okay, underneath it's a problem.
And 1.31.
We're right next to it, man.
All-time kind of low, right? From just prior to the election.
Right.
And man, you back it up. We were right next to that level as well in 2012 at 1.379.
Yeah.
So we're right at this critical level, man. I mean, look at that line right there.
It's huge.
There it is,
It's huge.
And it actually matches up with, if you just knock the tails off of these two lows,
I know.
They both kind of match up right at 1.44, call it, maybe 1.45, 46, which is where we dipped down to in some of those lows.
And, the way that this market's going, if we break that level, you will see something very fast on the way down. Very fast.
Let's see what we got for the Fed funds futures, because I know there was some volatility this week on this number.
Yeah.
And so right now, we're sitting at 175 to 2. Odds that we cut one quarter of a point, 76%.
Yeah.
The odds that you jump to 2 cuts by the time we have 2 meetings, 47%.
Right. Now, that went down from yesterday.
Yeah, was it 53, 55?
Yeah, when I was on the air,
I thought so as well.
Yeah.
And that had really accelerated over this week.
It did.
But that was the talk of yesterday in terms of we had a big miss in the ISM non-manufacturing.
Right.
And then it's lovely how the market goes through this. And then the market says, everything's so bad that everything's going to be great because the Fed's going to cut twice.
That's right.
So the market rallies.
Yeah.
Everything's so bad it's going to be great.
Right.
The market's going up.
Until it's not.
Yeah, right?
Yeah.
Exactly.
I love it when I go like that. There's no doubt, folks. That's just how the market likes to run, man.
And so that's it. And the odds of 2 cuts were at above 50 as the market was rocking off its lows yesterday.
Yeah. So if we go over to the banks and take a look at the banks, what you're going to see, the banks come back inside their consolidation. This is the XLF. You can see the top of that consolidation there was 28. The bottom of it is down here at 25.
Okay.
And they came down hard, man. There's
Can we see what's in these? Does this one break it down?
This is Berkshire Hathaway, mostly. It's deceiving because you see the Berkshire Hathaway is 13%, J.P. Morgan 11%, Bank of America 7.5%, Wells Fargo 6.5%. It's the big banks.
Yeah.
It's just so funny that you never think about Berkshire Hathaway being in the.
Yes.
They're in the insurance business, but guess what? They're a monster bank.
Yeah.
That's what it really comes down to.
Yeah.
Now, what I like to do is always keep track of J.P. Morgan because that's one of the strongest. Yeah, it's one of the strongest ones out there, man. And, you know, that failed at the highs also. You bring this back, and you're going to see, you know, bottom line gets right to the top of its range again. That range, what is that? It's March of 2018?
Yes.
119, and it has a tough time up there.
Yeah.
You know?
Yeah.
You know, it's still strong.
No,
I mean,
definitely.
you know, you get a big consolidation, but best what, the lower end of that consolidation is a lot lower, you know.
Where were you looking at? Let's put it back.
Right there. Yeah, the December. Yeah.
Yeah, you're looking at 91 at made too. Even the highest, that's 98.
Yeah.
I was just going to look as we go to it because, I mean, obviously these banks are going to follow what we did in the market, but same thing, right? The rates were collapsing from the beginning of August. We get that reprieve. We actually traded above where we were at in rates. Yeah. And then, of course, you get the pullback with rates over the last 2 days.
Because, you know, remember how fast the rates went up from that low.
Right.
And people saying, okay, that's it. That might be the bottom.
We were up to 1.9.
Yeah. Stay right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
David White has had some great trades in his daily trading newsletter, The Path of Least Resistance, and now's a great time to sign up while saving 25%. Just use promo code OPTIONS at checkout and you can save 25% off your first month. And this offer still comes with a 30-day money-back guarantee, so you have nothing to risk. Dave has had some great options and equity winners over the last couple of months. If you'd like to see for yourself the types of option trades he recommends for his subscribers, then check out all the details on the front page of TFNN.com. This offer only runs for 1 week and ends this Sunday, October 6th, so don't miss out. Head on over to the front page of TFNN.com right now for all the details and to start your 30-day money-back guarantee subscription to the Path of Least Resistance today. Remember to use promo code OPTIONS at checkout. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 159. You get the Nasdaq up 43. S&Ps are up 15. Let's go inside the Dow Industrials and see what's happening here. Well, good old Apple. Apple's still hanging tough, huh?
They sure are.
Yeah, look at that. So Apple's putting 26 positive points. You got Visa putting 19, Travelers putting 14, Johnson & Johnson 13. You don't have many taken away from it, you know. IBM 3, 3M 2.
Lucky for the Dow, GE no longer a member of the Dow.
Oh, you're not kidding, man. There's no doubt about that. So you're at $1.60. We take a look at that. That's realistically, you know, he's going to need a lot more than that. The top of the gap, from the gap down from Tuesday to Wednesday, is 26,438.
Okay.
26,354. So you got a lot of moving parts. Have you seen? We were talking about it yesterday. Have you seen the Bill Gates thing yet?
I have not.
Okay.
I believe it's a documentary on Netflix. Is that correct?
There's a documentary on Netflix, and it's pretty cool, folks. I mean, it's worth watching for sure. About inside the brain of Bill Gates, and you know, I mean, the stuff that he's doing, him and Melinda with that foundation is phenomenal. I mean, there's no doubt. I mean, you're talking about toilets, clean water, polio, and now they're into nuclear power. I'm not going to. You want to see it. It's just kind of cool, you know. And the amazing part is that they were showing how. I mean, that guy was going 24 hours a day.
I'm sure.
Yeah, and he thrived on it.
Yeah.
You know what I mean? So.
Similar to Zuckerberg, it makes me think of, you know.
Probably, yeah, different animals.
Because if you're a coder and you're creating that stuff and you can do everything on your own,
right?
You know, you're not going to pay somebody out of the door to do what you can do, and that's why you're so brilliant. I mean, you know, Bill Gates dropped out of college because he saw the opportunity that he was living in at that time was going to, you know, just be exponential. And I haven't seen the documentary, but you know.
And then they have Paul Allen. It's pretty cool. So, Paul Allen, they showed he loved Jimi Hendrix.
Okay.
And he was a guitar player himself. And then, you know, unfortunately, he got Hodgkin's disease very young, and that's why he retired. 1983. You know. And they show it. It's pretty cool. And then they had a friend. This is what's so wild is that there's three of them, and their friend who was brighter than all of them. That's what Bill said, right? And they were the nerds. And so one of them said, "Okay, I got to start working out. I'm gonna, you know, build up my body." So he went to a mountain climbing training camp.
Okay.
And died.
What about that?
Fell off. And he's talking. I mean, they were only like 16 then.
Man.
Yeah, I know.
Yeah.
They hired them. So check this out, folks. They were in high school, and they hired these three to do the classes because they were merging a boys' school with a girls' school.
Okay.
And the beginning of that, it's just amazing. They're these large schools and then large companies are hiring them, three of them, they're only 16, to turn around and get straight.
And that's really going back, right? Is that the 70s or the 80s at least?
That's the 70s. Because they're showing.
He's 16,
This is where it's at. So listen to this. They're showing that what the computer was doing then, it was a big deal when the computer goes, 2 plus 2, what is it? 4.
I was going to say it's a calculator.
No,
right?
that's
it's basically a rudimentary calculator, but that alone, right?
That's where it was at.
Yeah.
You know, so the bottom line is it's
you've seen. I mean, even IBM, right? Some of the stuff with NASA, it was just basically stuff any calculator on your iPhone could do today, but that was computationally worth so much money because you normally have to have people crunching just math equations that are, I don't want to call them simple, right? Because there's like 15 digits or 25 digits, but that type of function is how things started.
Yeah, and that's what they showed. They showed the amount of code that it took just to do 2 plus 2.
Crazy. Yeah.
You know, but it's the concept because once they knew they had the concept, then guess what? You can code.
Pretty cool. I plan on checking it out. I've been hearing from other people as well.
Yeah. So Netflix, NFLX. I don't think it's helping their stock though.
No, I don't think so either.
Yeah. Well, look at that, man. That's 3 months, 384, 268. Oh, check this out, man. Oh, so what I was just going to say, folks, is that, you know, you hear plenty of people on a continual basis saying, yeah, they're long-term investors, and, you know, God bless you, buy the SPY and get rid of and keep it for 20 years. No, I understand that. But if you're trading like these high-end stocks, man, you got to get out of them at some points because this is like phenomenal.
Yeah.
You know, what happens.
Oh, for sure.
Now, listen to this, though. This what just brought me up this morning. You're not gonna, in Tampa Bay, they just expanded the Hard Rock. Okay.
Yes, I saw yesterday was their grand opening.
The grand opening.
Yeah.
But what we didn't know, I don't think you knew this either.
Okay.
That picture the Hard Rocks. There's a lot of Hard Rocks. That Seminole Hard Rocks. There's a difference.
They own the Hard. No, they own. They own
it now. They bought it.
Yeah.
Right. So the one in Tampa is their most profitable.
Okay.
I was shocked because the one over in Fort Lauderdale is a monster, right?
Yeah.
So they make $1 billion in Tampa.
Okay.
So the articles in because they had all the big stars
Yes,
there last
I
night.
happened to see. I follow them on social media,
right.
and so it popped up yesterday. I saw Nicole Kidman was there.
Exactly. And then her husband's
yep,
going
the
tonight.
singer, yep.
They net, to the bottom line, $1 billion in Tampa. Now, that's before this expansion.
Yeah.
Isn't that
And the
wild?
expansion is mammoth, folks. It's dwarfs their current hotel size. And it's amazing. I mean, since I've been down here like 14 years, and it was very little back then compared to, they now have table games. They have the monopoly practically in Florida on blackjack, roulette, craps.
And they show how it started, folks, and they show a warehouse. This is in the Tampa Bay Times.
Bingo, right?
Bingo.
Yeah.
Started, there's only 4,100 members.
Okay, of the Seminole tribe.
Of the Seminole tribe.
Yeah.
Pretty amazing.
And they were leasing the rights to use the Hard Rock name, right? And they made so much money that they said, we're just going to buy the whole Hard Rock.
Right.
So that's, I know they have, of course, the one in Hollywood.
Yeah.
I know they have the one in Vegas. I'm sure they have other properties that go under that name.
It looked like the revenue they bring, I think it was 4.5 or 5 billion to the bottom line, but 1 billion is just out of Tampa.
Pretty cool.
Oh, it's amazing. It's like,
and it's a lot of slots. There's a lot of retirees. Hopefully people aren't spending money they don't have, because you know, I walk there and play poker occasionally, and same deal with poker, man, you know, because the
spreads are big, right?
Yeah, and well, the spreads on slots are always big, right? And they're everywhere. Like in most casinos, they're everywhere, and they thrive off slots more. They got plenty of table games, but it's a little bit dicey when you're in a state that's surrounded by retirees, right?
Right.
Hopefully that money is not.
Meaning the big buses come out, folks, especially after check day.
No matter what day it is, man, there's people in there 24/7 playing slots. So
amazing.
Yeah.
So you got S&Ps out here. Let's just take a look at them, because this is, let's see, giving it up a little here. We're up 13. ESZ 9. Yeah, there's not much action here. The E-minis would have to get back inside, 29.18, and you're 29.25 to really get something going.
It's like the overnight high.
Yeah, because we get that little pop. Is that the, it was in the jobs number, right? I know.
Yep.
So we'll see where that whole thing's going to take us. Oil, it doesn't.
Quite a week for oil.
It is, man. It doesn't seem.
We get a 50 handle. Yeah, we did. We got a 50 handle.
Yep. And so what you have out here today, now this is really bearish, the way the setup is. You know, you came into the swing lows, and, you know, you had some good volume yesterday, 642,000 contracts.
$50.99 that low.
Yeah, and we'll see what kind of bounce you get, you know? This has been a one-way move, man.
Oh, man. Pretty remarkable. $50 when you had the attacks, you know, 2 weeks on the Saudi fields, and it was at $64.
Dow Industrial's up 142. You get the Nasdaq up 36. S&P's up 12.5. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up $1.30. You get the Nasdaq up 34. S&Ps are up 11.5. And this is going to be a last weekend, folks, to take advantage of a great promotion out here by my man, Mr. Dave White. And what are we talking about? We're talking about the path of least resistance. This week only, David's newsletter is 25% off. He's had a great run out here, in the equity market, but basically using options in this highly volatile market. So if you come over to our website at TFNN, you're going to see it right under featured content. And our man, Mr. David White, this is how the sale goes.
Yeah, you just got to enter the promo code OPTIONS at checkout. You get 25% off that first month. It knocks off almost $30 off the price. Still comes with a money-back guarantee. But if you decide to keep it, you're only paying that value for the first month. This offer is going to run through Sunday. Dave's had some great trades, man, up here, just even since August, September. You're talking about $1.65 to $4, 35 cents to $1.30, 150 to 420, and 20 cents to $1. And he just emailed me that they had one. I mean, the people who got in at the beginning of this when we first launched it, it was Monday we launched it.
Okay.
He's already had another one this week. I'll put it on.
Sweet.
Yeah.
And we have the volatility, man. I mean, that's.
And what's great is you get a full month, of course, with that. So that takes you through options expiration this month. You really get to see a whole month of the newsletter. It comes with a 30-day money-back guarantee. So check it out right on the front page. That's going to run through Sunday. We'll take that down on Monday morning. And it's a great deal. It always comes with a 30-day money-back guarantee, but it's nice, 25% off of the path of least resistance.
And the fall is here.
Man, what are you going to be for Halloween?
Oh, I like it.
Trick or treat.
I'm going to be a cat.
Oh, I bet. Yeah, I bet.
There's one stock out here what is this thing? Ring Central. Is this a new stock or something? Let's see what this is. Ring Central. What do they do? Software as a service solution for business communication. The company offers multi-user enterprise-grade communication solutions. So it's up $30. So is someone buying them or something?
Communications. Exclusive provider to UCA Solutions to Avaya. Avaya deal with Ring Central since stock soaring.
Yeah, they're both happy with it, I guess.
Avaya Cloud Office. Analysts see the venture into the public cloud field with a market-leading user something as a software, user communications provider as a plus for Avaya and its customer. Ring Central shares were up huge. The launch will accelerate Avaya's transition. So this is kind of looking at it from the Avaya
into a cloud competitor. I mean, a cloud competitor. So let me just look at this.
Let's just. I just wanted to see. Here's. So it's going to enter a strategic partnership with Ring Central. Ring Central is contributing $500 million to the partnership. It includes $125 million investment in preferred equity and convertible. And Ring Central is also going to pay Avaya in advance of $375 million in stock and future payments.
That's pretty
interesting.
Cool.
Yeah.
And
Might be a case of some synergistic practices if both sides are rocking.
Look at that! Look at that Ring Central. Holy cow! That's quite a chart. You bring this back to 2016, folks. It's $15, 10-bagger, and
think of the AVA.
Thank you.
Why? There we go.
Okay, so watch this. This is going to be interesting, man. Now, this equity, you talk about a blast from the past. This is a, I forget what you call it. Like, you know, Hewlett Packard, they pushed other stocks out. This is Marvell. I still have stock in this from my mother. Okay. These are spin-offs, like, and this was the biggest dog in the world inside the spin-off. I mean, it just,
so it's only been around since the beginning of 2018, this one.
Yeah, so maybe, let me make sure this is it. This collaboration stuff. Yeah, it's still in the communication, the real video business. I believe this is it.
Yeah.
Maybe it's not, though. It doesn't, it seems like that chart should be longer than that.
Yeah, I'm not sure. It's pretty vague what they do. It could be.
Yeah, but it's certainly got them off the low. I mean,
yeah, pretty remarkable though that it only gets you back to where you were. Maybe that's earnings, or I'm just going right that gap right there.
Yeah, for sure.
You know, that gap, the high of even the day below the gap is 1174. Let alone if you go back to September 11th, you were up at 1332.
Yeah. We got a moving market. There's no doubt about it. And you know, it's amazing that this whole cloud deal, I mean, it's going to it in a big way.
Oh, for sure.
But it's so funny because that's how everything started out. I mean, it used to be always, you know, like in the airline business, which is really good, got to use computers quicker than anyone else. You always, everything on your desk was a slave to the cloud. You know, you didn't have your CPUs right here. You know, you were hooked in to their big computers, their reservation system.
Sure.
And now, guess what? That's where we're at.
Yeah.
And you can really see it because of security, right?
Yeah.
You know,
Definitely.
There's no doubt about that.
Get it locked down in most cloud servers.
Oh man, let me tell you. Let's see what other equities out here have some volume, and we'll see whether they get any volume out here today at all. Oh, look at this. The energy business, folks, is in tough business. Look at Chesapeake Energy, $1.32. Watch, I got to pull this up because this is like, and evidently, you know, I mean, this oil business, you know, is something that it seems to me like at 50, I thought these companies would be all right. But look at this, man. They're going south left and right, man. You know, what is that? Yeah, well, that's 08. Oh, but even so, 08, you're at $70. You're down to $1.32.
Yeah.
You know?
And even if you just go back to a more realistic time as we're above $8 coming into 2017. So, you know, that's quite a discrepancy from $1.32. They've got some internal problems themselves, I'm sure, beyond the energy market.
Yeah, I guess it's very expensive, you know, to get the wells going. But it's not expensive if the oil price is higher.
Oh, that's for sure.
And when you're dealing with, imagine trying to figure out what you're going to do when we just showed that just this week, oil high to low is $5 or $6, okay? $5 or $6 could make or break some companies.
Many companies, I'm sure, right?
Monster number.
Yeah.
The composite, we go take a look at the composite. Now, the NASDAQ composite, folks, that baby right there is really something you want to watch because outside of the small caps, this is the second largest weakest indice. You know, the small caps are the ultimate. So this is going to be a big one today because we got up to, let's see. Yeah, this would look like just a sideways week, the way we're finishing right now. You get a big doji, and a doji on a sideways week can basically be the halfway move down. So NDX 100. Let's go see the strength versus the weakness inside the NDX because those chips, they brought us down pretty good this week. Skyworks, that's up 3.5%. Activision's up 1.9%. Apple up 1.8%. Taken away from it, Alta Salon down 1.9%. Alexan Pharmaceuticals down 1.9%. C-Trip and Wynn Resorts. Yeah, Wynn's hanging tough at the bottom. And that's, you know, it's interesting. So, this week, Sunday night, China's going to come back online, so it'd be interesting to get the numbers out of Macau this week. Yeah. You know, because you had China on vacation last 4 days.
Gambling, right?
Yeah, totally. Dow's up 136, Nasdaq up 40, S&P's up 14. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 143, Nasdaq's up 45, S&Ps are up 14.5. And if we go over to Hong Kong, folks, this is getting heavier each and every day. So check this out. You know, it's Friday night right now in let's see, it's 10:54 in Hong Kong right now, p.m.
Yes.
But what they just did, they just suspended all trains because yesterday they said they didn't want any masks.
Yes, the government invoked a rail use power, it says, to quell unrest, saying no more masks. So then the protesters came out all in masks, right? I mean, these other things accelerate, man. Pretty intense. They're saying to the break. So then you have...
they shut the train service.
And where I just didn't see that part of the city's metro operator shut down services late Friday. And that's the first time since this all started. So not something that's like, oh, that's happened before when they had the protests. You know, as you come into a weekend... It's pretty intense, man. Hopefully everything, and you had somebody getting shot for the first time this week, keeping that in mind. So things very worrisome as they escalate. They're going to
stop the movement. That's the, you know, imagine folks, you know, if you stop the transportation, the bottom line is that, yeah, that's the quickest way to stop people from coming in and out of the city.
And this is, you can see, I mean, these are the live updates. You get riot police firing tear gas at protesters, trying to disperse them. Demonstrations in other parts of Hong Kong continue into the evening, and services on 3 major train lines were suspended. That was at 10:06. And
yeah, this is happening right now.
It is. It sure is. That was within the hour. That one was, you know, that you got riot police up there firing tear gas.
And Hong Kong what's going to be intriguing here is that, I mean, that is a major money center. That is like a major money center. Folks, stay right there. We got our man, TD Ameritrade, Fast Money coming up next. Then I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.